One of the most talked about stories in Canada's wealth management industry in recent months has been GMP Capital, which sold, you might recall, its capital markets business to Stifel. They decided to focus on wealth management and its Richardson GMP business, owned with the Richardson family. Now, when they really focused on that and launched a deal to go all in on that. Initially, some GMP shareholders, including the former CEO, did not like the terms of the deal to consolidate the operations. They then got through that, and so now Richardson GMP, for those who work with some of their advisors, is going to be known as Richardson Wealth. GMP Capital stock is being renamed as RF Capital, and Kish Kapoor, who had been serving as the interim CEO, becomes the permanent CEO. Kish, someone who knows a lot about the wealth management world after basically working in it over the last 4 decades. Always nice to see you. Thanks very much for joining us.
Thanks, John.
So I guess in our time this morning, I don't want to spend too much on the back and forth that I just outlined there that has consumed a lot of time over the last few months. But now that you're at the finish line, does it feel good? Do you feel happy? Are you smiling?
Oh, I'm very much smiling. I think this has been a long journey. It's a long journey for, I would say, 32,000 of our clients across the country, 164 incredibly talented investment advisors, our 870 employees, all of whom, were patient, were confident that this was the right thing for our clients across the country. And so I'm delighted that they've got what they wanted. And, the effort that we put in to get here has been, really rewarding.
I'm going to get to one of the big questions ultimately that I am interested in now that you guys have gone through all of that. And it goes back to something you and I talked about when you initially put out this plan as a business to really focus on the wealth management side of things. Now, you highlighted about 164 advisors. It's a big network that you work with. And you had said you thought it would be doable, in fact, easy to basically double that, to add another 160 or so. Do you still feel that way today?
No, our intention clearly has always been to grow this business. We think there is a significant opportunity in the Canadian marketplace. We're at just under $30 billion today. We're in a market that is a $4.4 trillion wealth market in Canada today that is expected to grow to $7.7 trillion by 2028. We know that a lot of independents are thriving and succeeding in this marketplace. We think that in this environment, including the global health crisis, where more and more people are turning to advisors for good, solid advice across the household balance sheet, the opportunity for firms like us is very significant. So I'm still completely confident. In fact, all our shareholders are confident that we have an opportunity to double or triple in size. I can't tell you exactly by when we will do it, but through organic growth of our advisor practices, attracting new clients across the country, recruiting advisors from other firms, acquiring other firms, lots of opportunity for us to double or triple in size.
And I just want to set the record straight as well. There had been some reporting through this process. You talked about the long journey that some of your advisors, a relatively small number, had decided to move elsewhere. Can you just update us on what happened and what the communication has been like getting to this point?
Well, you know what? The most important statistic is that 97% of our advisors, or 97% of the people who control 97% of our client assets, overwhelmingly supported this transaction. So 3% didn't. And I tell you what, as an organization, we're focusing on the 97% who decided that this is, in fact, the place for them. This is the place for their clients. This is the place for all the people who support them. That's all we're paying attention to. The fact that 3% left, in my mind, it's a very small statistic.
One of the other things, Kish, you talk about and why you feel so confident about building this business is that there is an appetite in this country, particular with certain sized portfolios, for people to have regular dialogues, face-to-face interactions, and that the advisors play a key role in that. Now, you and I this morning are talking from these different locations. Probably in normal times, we'd be in the studio together having a face-to-face conversation. So how do you approach a face-to-face driven business during a pandemic?
Technology's been a great thing. The technology we're using here today, or whether you're using Zoom or using Microsoft Teams or you were using WebEx, all our advisors have been able to engage in very meaningful conversations with clients right across the country. So we've not seen, in fact, any disruption in our business or any meaningful disruption. At the height of the crisis, in terms of market volatility in March, our assets had dropped to $23.5 billion, and now our assets are back up to $29 billion. We've, in fact, not only got more clients and stabilized their portfolios, we've in fact recruited 6 or 7 teams in this period to join us, and more are in fact talking to us now and joining us in the next 6 to 7 months.
Well, look, this has been an opportunity for different business models to attract investors. You just outlined what's been happening with your business. We've talked about the rise of so-called robo-advisors in the past. Obviously, you're aware that we just saw, for example, with one of those names in Wealthsimple, that through private investors, they're now valued at north of $1 billion. I wonder what you think about the market perception currently of a business like yours. You're confident in it, but even just looking at your current market cap versus the private valuation of a company like Wealthsimple, there seems to be quite a disconnect there. What's your reaction to that?
Yeah, frankly, I don't really understand that valuation, but what I do understand that in our market, there is huge demand for face-to-face advice. Human beings ultimately will want to talk to human beings. Human beings will want to talk to advisors who are smart, who are supported by a smart team of people, who offer personalized advice to clients that really makes sense to them. And then, this, to a large extent, what we're doing is managing people's lives and not necessarily only their money, right? You're talking to people on a real-time basis, especially through challenging markets, in offering them advice. So, when I look at our valuation, there may be a disconnect relative to somebody else, but the opportunity for us to actually increase in our size, both in assets, in earnings, in dividends, in valuation, all of them is ahead of us now, especially with the uncertainty lifted.
Kish, you have a saying that you live by, which is only the paranoid survive. So as you look at this uncertain road, we try. What is going to keep you most alert right now? What are you going to be thinking about most over these next few months in this uncertain 2020?
Well, it goes right back to making sure that we're assisting our advisors and focusing on their clients. And that's our number one priority. It's always clients, and the advisors that support them. Do everything in our power, in our time, effort, resources to focus squarely now. The deal's done. We're now Richardson Wealth. Our entire effort is to make sure we serve our clients very effectively for all the things they need for generations to come.
Okay. Kish, thanks very much. Appreciate the update.
Okay, thanks. Bye-bye, John.
That's Kish Kapoor, the president and CEO of GMP.